Good morning. This is Horizons, Middle East and Africa. Our top stories this morning. The Republican-led House rejects a temporary funding plan backed by Donald Trump with just over 24 hours to go before a government shutdown. Secretary of State Antony Blinken says the U.S. is considering sending American officials to Syria. And stocks and futures head lower after another downbeat day on Wall Street following the Fed's hawkish pivot. U.S. Treasuries under pressure with the yield curve at its steepest since 2022. Well, it's just gone 8 a.m. across the Emirates. I'm Christine Burke in Dubai in for Jumana Bersechi. Well, happy Friday and welcome to almost the end of what has been a very big week for markets and for central banks. It's also been a week full of a lot of surprises. We got a more hawkish Fed, potentially a more dovish BOJ than markets expected. And really that has led to a lot of red across the screen for global markets. And you can see here as we head into today's session that we are seeing S&P 500 futures indicate that we potentially will see another down day on Wall Street. The U.S. Treasury market has seen a pretty significant sell-off over the past 2 weeks. We are seeing a little bit of easing in that pressure today, but the 10-year yield continues to trade above 4.5%. Now, another theme that continues to hold strong is dollar strength. You can see here that we are a little changed, but still we're seeing the dollar around the strongest level since 2022. And it is that dollar strength that is also weighing on the oil market. Brent is heading for a weekly loss of more than 2%. But in the midst of all of that negativity, perhaps, there is a little bit of a silver lining that we can consider. If you take a look at this chart that we're going to put up for you, this is what we have to potentially look forward to in the next week. So what we're talking about here is what is known as the Santa Claus rally. So this chart shows you that the S&P 500 tends to gain more often than not heading into the final stretch of the year. So that 5-day trading period between Christmas and New Year's. We didn't see that happen last year, but we did see a rally, as you can see here in this chart, in every year since 2017. So potentially some good news as we consider how we're going to close out the year of 2024. Quite a wild year, and I'm sure there's more in store for 2025. Now, let's get over to Asia because we need to check in on how markets there are doing. Avril Hong is standing by for us in our Singapore studio. So, Avril, how are things shaping up there?
Well, Asia stocks look like they are facing pressure into the end of the year as well. I mean, you look at how the region's benchmark is on its longest losing streak since April, and all of this, no thanks to that Fed-induced sell-off, right? Those concerns about higher U.S. yields, the strength of the dollar, and how Asia central banks now probably cannot cut as aggressively as initially hoped. So that's exerting pressure on Asia stocks. You have a couple of outliers today. You have the Hang Seng sitting a touch higher. This is helped along by the stock of Tencent. We have the cheaper Japanese currency fueling gains in the exporters in Japan. So that's helping the Nikkei to kind of buck the trend in the region. And of course, the cheap yen is on the back of that dovish Ueda comments, right? Where he didn't quite rule out that we're going to see a hike in January, but comments surrounding wage negotiations, Trump's policies, that's what's raising speculation that we might have to wait till March till we actually see a hike from the BOJ. So that's keeping the yen weak. Christine?
Thanks, Avril. That's Avril Hong in Singapore. Well, in politics now, the Republican-led House has voted down a temporary funding plan backed by President-elect Donald Trump. The rejection sets the stage for a potential U.S. government shutdown with funding set to lapse on Friday night. Our news desk editor, Jill Deesis, joins us now. So, Jill, it's been a pretty dramatic couple of days in Washington, D.C. Why did this bill fail?
Yeah, Christine, ultimately, this is just such a surprise because this was initially expected to be an incredibly smooth experience. Neither Republicans nor Democrats really wanted to have a big funding fight ahead of the Christmas holidays. So there was an initial expectation at the start of the week that they'd pass some, legislation that had some pretty broad bipartisan support and then just kind of move on with their holidays and deal with this all in March, when the stopgap issue came up again. Instead, what's really happened here is that you had President-elect Donald Trump kind of of wade into this fight, and is, sort of at the last minute there, along with Elon Musk, who he's, of course, bringing in to his new administration to work with government efficiency. The two of them backed a much shorter sort of Plan B version of this bill that was only 116 pages rather than 1,500 pages, stripped out a lot of different, bits of spending and all that kind of stuff, but then also which included, some backing from Donald Trump, something that he really wanted, which was this idea of suspending the debt limit for 2 years. Donald Trump has kind of indicated that he ultimately would really like to do away with that entirely. I mean, the thing, though, is, Christine, that's a really difficult thing for some Republicans to stomach. I think that they're very uncomfortable with the idea of raising or even eliminating the debt limit entirely. Some of that kind of came back to bite Donald Trump here. 38 Republicans voted against this legislation. And now at this point, it's kind of up to House Speaker Mike Johnson to kind of go back to the drawing board and get something over the finish line before this really, the deadline really ends at the end of tomorrow in the U.S.
It's been really interesting as well that President-elect Donald Trump is weighing in so much in Congress when he's not even in the White House yet. So that's been interesting to watch. What happens next? I mean, how do we get a funding bill over the line? Are we looking at a potential partial shutdown?
Yeah, well, at this point, it's really difficult to kind of see a path forward. Mike Johnson could kind of, bring this back to the Rules Committee and then maybe bring it back for a vote again. But again, because this failed already during this, fast-track 2/3 majority vote, it's kind of difficult to see that something that's already failed in the White House would maybe even, sort of be reworked. Maybe he's able to cut some other kind of deal that makes everybody happy here again. But ultimately, I mean, yeah, at this point, there's not really a new solution. And again, they've really got until midnight Friday to kind of come up with something before the government is headed for that partial shutdown. Obviously, some services would still be open if that were to be the case, but others obviously wouldn't. And again, kind of sets us up for, somewhat of a fraught end of the year into the next year. It's just kind of seems like a situation that nobody really wants here. But again, it's really difficult to tell what ultimately happens until, everybody in the U.S. starts waking up. And then you kind of see if Johnson is able to push something through, if Donald Trump continues to try to be involved in trying to, wrangle in more votes and everything like that. But it does just kind of leave a bit of a mess right now and a lot of uncertainty over what really happens here.
Yeah, and we're really not far away from that midnight deadline, so we'll see what happens. That's Jill Deeses. Thanks so much for all of that. Well, here in the region, Secretary of State Antony Blinken says the U.S. has received positive signs from the rebel group that swept Bashar al Assad from power in Syria. Speaking on Bloomberg surveillance, Blinken says the U.S. is considering sending American officials to Syria.
We're also looking at getting people on the ground in Syria. I think it's important to have direct communication. It's important to speak as clearly as possible, to listen, to make sure that we understand as best we can where they're going and where they want to go. So we'll be looking at pursuing that in the coming days. What we don't want to see, and what we could see, is one dictator replaced by another, one outside power or powers replaced by another, one dominant group replaced by another. And that's certainly been part of the story in other places.
Let's bring in Bloomberg's Paul Wallace, who joins us now from Istanbul. So, Paul, it would be pretty significant for the U.S. to be sending officials down onto the ground in Syria to kind of help further along a smooth transition. What do you make of the comments that we heard from Antony Blinken?
Hi, Christine. It would be significant, especially given that Hayat Tahrir al-Sham, the group that's in control of most of Syria, is still designated a terrorist organization by the U.S. And many other countries. But I think on the part of the U.S. and actually a lot of other Western states, there's a lot of realpolitik going on here. They realize that HTS is the most likely group to emerge as the head of Syria's government whenever it's sort of formed in a proper sense. And so far, HTS has been quite practical. It's sending the kind of message that outside powers want to hear. It's saying that it's going to treat all Syrians, regardless of their ethnicity or religion, well. It's going to treat them fairly. early. HTS is a Sunni group. It used to be affiliated with Al Qaeda until the breakaway in 2016. It said it's very much moderated since then. And I think so far its messaging has been pretty, since it took over Damascus early this month, has been pretty sophisticated, and it's done a pretty good job so far of building ties with other Arab states and Western states. But it's very early days, and as Blinken said, it's unclear what's going to happen in Syria, and Bashar al Assad could well end up being replaced by someone else who's just as dictatorial.
Yeah, there's so much to watch, and it'll be interesting to see, too, whether we see global nations remove sanctions on Syria, potentially remove HTS from terrorist designations. That will be the thing that we're watching next. We also got some comments overnight from Russian President Vladimir Putin. Take a listen to this.
The situation today is difficult, of course, in the Syrian Arab Republic. We are counting on peace and calm to emerge there. We support relations with all groups, with all countries in the region. The overwhelming majority of them say that they would be interested in our military bases remaining in the region.
Well, Paul, you heard there what Putin had to say on the bases in Syria. We also heard from Putin saying that he has not actually met with Bashar al Assad, who is, of course, or we have heard, is in Moscow. What do you make of all of Putin's comments?
I think in a lot of ways, Putin is on the back foot. Russia, along with Iran, were Assad's two key foreign backers, and his fall sort of took them completely unaware, or the let's say the rebel HTS's advance from the northwest of the country and the speed of the Syrian military's collapse really took Russia and Syria by surprise. Assad was Putin's main ally in the Middle East. We've mentioned those two military bases, a naval base at Tartus and then a nearby air base. They're absolutely crucial, those two, not just for not just to enhance Russia's influence in the Middle East, but also to supply what forces it has in Africa, in places like Libya and the Central African Republic. So I think Assad's fall is in some ways humiliating for Putin. He's trying to make the best of what's happened. He's obviously trying to also create, good relations with HTS, and I think his main goal will be to try and ensure that Russia keeps those two bases, the naval base and the air base, and it's very unclear whether that will happen. We've reported, Bloomberg's reported that Western powers would like Russian forces out.
That's Bloomberg's Paul Wallace. Paul, thanks for all of that. Well, still ahead, we'll get the market outlook with Maybank Group Wealth Management as traders await the Fed's preferred inflation gauge for fresh clues on the rate outlook. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Investors are cautious as they await the Fed's preferred inflation gauge for fresh clues about its policy outlook. Fresh data shows a still robust U.S. economy on the back of strong consumer spending. Let's bring in Eddy Loh, CIO at Maybank Group Wealth Management. Eddy, thanks for joining us this morning. It's been a pretty nasty week for markets in the wake of the Fed. Also, we got a more dovish BOJ yesterday that has led to a lot of weakness in the yen. What do you think about the market pullback that we're seeing?
Right. If you look at the Fed, I think it suggests that they are taking a little bit more cautious approach in cutting rates, which is not surprising given the fact that headline inflation has been ticking higher in the U.S. So we do expect, the disinflation process to be a bit more bumpy as we move into 2025. Having said that, the Fed is still going to cut, albeit on a more gradual basis. So we are still pricing in about 2 to 3 rate cuts for 2025. Of course, a lot of that is dependent on how the economy grows and also how the inflation pans out.
Later today, we get the U.S. PCE report, and this includes the Fed's preferred price gauge. Is there anything that we can see out of this data that would change the narrative from here? I mean, it almost seems like it's an irrelevant data print at this point in time, given that we just heard it very explicitly from the Fed that they are concerned about inflation.
Right. I think I don't think the PCE data, be in the headline or the core, is going to provide any big surprises. And going back to the Fed, if you look at what Jerome Powell has been saying during his briefing, he's saying, the economy is really in a good shape, and he does need more evidence of further progress in inflation before considering additional rate cuts. No, but having said that, we think that the recent pullback in the markets, it's a healthy one. Because if you look at S&P 500, it has gone up quite a fair bit since the Trump election win, and it's quite narrow base. So I think this retreat actually does provide investors with the opportunity to get back into the game at a slightly lower valuation. And if you look at the fundamentals, I think U.S. economy, I think, is still going to be resilient. Corporate earnings is still going to be supportive of markets. And the Fed, even though it is not going to cut as aggressively, but it's still cutting rates in 2025, and that's our expectation.
Yeah, so you see the pullback in the markets for equities as healthy, but what about the sell-off that we're seeing in treasuries? I mean, yields have gone up quite a bit. We have a 10-year yield that's now right around 4.55%. T. Rowe Price Group said earlier this week it actually sees the 10-year potentially moving back to 5% in the first quarter. Do you think that that's a valid view?
Well, the 10-year Treasury yields have been quite volatile in 2024. I think it has gone up to as high as 4.7, 4.8 this year, and as low as 3.6% after we got a bit of a recession scare. I think that was in early August. So I think this shifting rates expectations is going to continue, and that's going to lead to volatility in the 10-year Treasury yields as well. But if you look at the current levels, we think that we'll argue that at 4.5, 4.6%, that is actually trading at the higher end of the range that we're expecting for the 10-year Treasury yields. So while policy rates are not going to come down as quickly, it's still coming down, and that should put a lid on the 10-year Treasury yields as well. So we thought that it is actually good for investors to maintain some exposure in the 10-year Treasury yield. Treasuries, because I think if you look at a carry 4.5, 4.6%, I think that's decent carry. And should economy pans out, should the economy actually turn out to be a little bit worse than expected, the 10-year Treasury yields can also serve as a good hedge.
Yeah, and I really want to ask you about the BOJ, because that seems like it was a bit of a surprise yesterday. I'm not sure that we expected to get such dovish comments from Kazuo Ueda. How did you take what you heard from the BOJ yesterday?
Right. I think it was a 50-50 call before the meeting. We were thinking that maybe the BOJ would hike going to the meeting because inflation in Japan was ticking higher. But if you look at what the governor has been saying, I think he's a little bit more cautious in hiking rates. He wanted to see more data, not just in inflation. He's talking about wage negotiation as well. And at the same time, I think Trump inauguration and policies that's going to come forth, I think that's weighing on his mind as well. So at this juncture, perhaps the Bank of Japan is going to be a little bit more cautious about hiking rates. So we are thinking that, we think that they're still going to hike, but perhaps not as quickly, possibly in March, although we cannot rule out January totally as well.
All right, Eddy, well, thanks for all of your insights and good luck as you head into the new year. Well, that's Eddy Loh, CIO at Maybank Group Wealth Management. Well, now coming up in corporate news, FedEx soars in late trading. We get the details of a possible $30 billion spinoff next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. FedEx soared in late trading after announcing it plans to spin off its $30 billion freight unit into a separately listed company within the next 18 months. The spinoff will allow FedEx to focus on its core business and could boost its underwhelming stock performance by capitalizing on rising valuations of standalone trucking companies. Meanwhile, FedEx trimmed its full-year profit forecast due to weak demand, especially in the U.S. at its express unit. The parcel giant attributed its second quarter profit beat to continued savings from its efficiency initiative. Bloomberg has learned that Diageo is exploring a sale of Ciroc vodka, a brand once backed by music mogul Sean Diddy Combs. The British Spirits Group has reached out to potential buyers, including beverage companies and private equity firms, but discussions are still in the early stages. Now, the sale is part of Diageo's efforts to divest assets and focus on its core brands following a decline in sales and profitability in recent years. Boeing has won an order valued at $36 billion from low-cost Turkish airline Pegasus for 100 737 jets with an option for another 100. It marks a strategic reversal for Pegasus, which had previously preferred Airbus. The deal is also a win for Boeing after its recent challenges, including a prolonged strike and a near-catastrophic accident. Real estate mogul and former owner of the Los Angeles Dodgers, Frank McCourt, is making a bid to buy TikTok despite ByteDance's reluctance to sell. He told Bloomberg he spoke with over 60 elected officials and policymakers about his bid. McCourt also held talks with members of President-elect Donald Trump's transition team to make his case for a possible deal. Sources say he is also recruiting a possible CEO, including former TikTok Chief Operating Officer V. Papas. Well, let's get you a markets board as we move into the second half hour of the show here. You can see we're pretty red on the screen. S&P 500, NASDAQ futures, all down. We are moving ahead to U.S. PCE data a bit later today. Probably not going to be an extremely crucial print for the market, just given that we did just hear from Jerome Powell on Wednesday. Policymakers making it very clear that they are concerned about inflation. So it looks like, based on futures, we're heading for potentially another day in the red on Wall Street, and European stocks are also looking a bit weak this morning heading into the session there. Well, coming up, we look at how Russian guns and Iranian drones are fueling Sudan's brutal 20-month civil war. We'll be speaking with one of our reporters who just returned from Sudan. That's all next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. The Republican-led House rejects a temporary funding plan backed by Donald Trump with just over 24 hours to go before a government shutdown. Secretary of State Antony Blinken says the U.S. is considering sending American officials to Syria. And stocks and futures head lower after another downbeat day on Wall Street following the Fed's hawkish pivot. U.S. Treasuries are under pressure with the yield curve at its steepest since 2022. Well, it's just gone 8:30 a.m. across the Emirates. I'm Christine Burke in Dubai, in for Jumana Bursachi. Well, here we are, the final trading session of what has been a pretty big week for markets, and a week that has been full of a lot of surprises. I don't think many in the markets expected that we would get such a hawkish tone from Jerome Powell earlier in the week. And then equally yesterday, it seems that markets were surprised by what we heard out of the BOJ and Governor Kaswa Ueda. It seems like we now could potentially be looking at a rate rate hike from the BOJ that comes a bit later than markets expected in 2025. Let's check in on how markets are faring as we do head into this final session of the week. And ahead of that holiday week next week, it looks like we are heading for potentially another down day on Wall Street. We saw pretty choppy trading out of the U.S. yesterday. And today we do get the U.S. PCE report. So there will be some data for the traders to chew on, if you will. And the 10-year yield continues to trade above 4.5%. The Treasury sell-off drove yields to that level for the first time since May, and really we're sticking around that level. Dollar strength continues to carry through this morning. We're at the highest level since 2022 for the Bloomberg Dollar Spot Index, and it is that strength in the dollar that's weighing on the oil market. You can see that Brent crude here is down this morning, and we are seeing the benchmark head for a weekly loss. So potentially some more red that we're going to see come through today. But let me give you some potentially good news, at least for the S&P 500. This chart here shows you that the S&P 500 more often than not tends to rally going into the final trading sessions of the year. So in that period between Christmas and New Year's, the S&P has most of the time risen over that period. We didn't see that trend carry through last year, but on the chart you see that 2017 and beyond, we did actually see that trend. So let's check in on how markets in Asia are faring now. Avril Hong is in our Singapore studio. Avril, what are you watching in the final trading session there?
Well, Christine, we are keeping a close watch on FX, right? I mean, I talked you through earlier what we're seeing in equity, so I thought we'd rake through the currency space. It's really these concerns about the hawkish Federal Reserve, the resurgence in the US dollar that's putting pressure on Asia currencies, whether you're talking about the yen or the Chinese renminbi. Yesterday, we also got a dovish Ueda not helping the yen weakness, although today the Japanese authorities, the finance chief to be specific, has kind of delivered a verbal warning on the FX move. So that's helping to cap the yen weakness, but we're still about 2% weaker than just before the hawkish Federal Reserve. The PBOC today delivering a stronger than expected fix for yet another session, which is also helping to cap the rise in dollar China. Something else that I wanted to highlight in China is what we're seeing in bonds, because on the 1 year, we've just seen it breach a key 1% level on the yield. This is something we haven't seen since 2009, and it's against the backdrop of demand for Chinese bonds as investors search for safe havens, and the stock market hasn't been delivering that much. Also, the expectations of further monetary easing. What's key here is that there's a preference for shorter dated notes because of the speculation of intervention risk in the longer dated notes. So that's why you're seeing that reaction in China's 1-year bonds. Christine?
Thanks a lot, Avril. That's Avril Hong in our Singapore studio. Well, millions of dollars worth of Russian and Iranian supplies have changed the course of Sudan's brutal civil war as foreign powers jockey for influence in the strategic country. Moscow and Tehran are arming and fueling the nation's military, which has recently been gaining ground against the paramilitary group, the Rapid Support Forces. Bloomberg's Simon Marks has just returned from Sudan, and he joins us now for more on this story. So, Simon, really great reporting from you here, and a great story, an important story. Explain how outside forces, Russia and Iran, have been fueling the civil war that's going on in Sudan.
Yes, of course. We were in Sudan for a number of days very recently in Port Sudan, which is positioned right on the Red Sea, and through interviews with port officials, Sudanese officials, but also other intelligence officials, both inside and outside of the country, we've reported that Iran in particular and Russia have delivered a lot of fuel through the port and weapons coming in through the port, as well as the airport, which we've seen has been expanded. The military wing of that airport has had its runway lengthened and a new hangar placed inside the compound. It's not only these countries. There's two warring parties. There's the Rapid Support Forces, which was born out of a militia in the Darfur region, and they are being armed by the United Arab Emirates through a remote airbase. This is something I must say the country denies. But if through all the evidence we've accumulated, be it satellite imagery, shipping data, or sources on the ground, it's clear there's a lot of self-interest from these countries.
Yeah, a lot of different parties involved there. Why are Russia and Iran choosing to back the Sudanese armed forces? And do we know more about their specific interests in the country?
Yeah, I mean, Russia, they've oscillated over the years between the rapid support forces and the army. But recently, I think they've chosen to come in and back the army, basically because they are positioned in Port Sudan, their de facto capital. They've retrenched to this city, and that's situated right on the Red Sea, very strategically in this strip where there's a lot of activity now with the Houthis. It's a huge shipping trade lane, and I think deep down they've been in talks for many years now with the Sudanese authorities about getting a military base there, and that's become even more strategic, really, seeing what's happening in Syria, where they're at risk of losing certain assets. And the same can be said for Iran, which would very much like a military presence right there, sat on the Red Sea, not too far from their partners in the Houthis, and with strategic sort of access to places further north, such as Israel. So really, it's all down to geography, more or less, and interest there. There's a gold element too, I might mention. Exports of gold have risen in Sudan during the war.
Can anything be done to stop these countries from coming in and arming these warring parties? And also, do Sudanese forces, how much power do they actually have to control what's going on, given that there are all these different parties kind of vying for control and influence in the country?
Well, yes, there is a lot of both sovereign but also commercial interest in getting weapons and fuel and what have you into the country. But in the end, these two groups, they have the ability to step back and engage in talks. There's been several rounds of efforts engaged, mainly by the US and the Saudis and the Egyptians, to the extent who are also backing the army, I might add, something we reported on. But they do have the ability to do so. They have every power to step back, engage in peace talks. And so far, we've seen efforts through sanctions more or less fail. They've been fairly blunt and symbolic in terms of travel bans and naming certain people. But as we've seen through our reporting, you can still get stuff into the country via Port Sudan using all sorts of different networks.
Yeah, Simon, really interesting story. Thanks so much for going into detail on all of that for us. That's Bloomberg's Simon Marks, who's in Nairobi for us. And for more stories like this from the continent, be sure to subscribe to the Next Africa newsletter on the terminal and on our website, and also on our podcast, which is available on Apple, Spotify, and wherever you get your other podcasts. Now, for a look at some of the other stories that we are following today, Burkina Faso has released 4 French nationals who were accused of spying and detained for over a year. The West African nation's military leader has reportedly agreed to their release after mediation efforts by Morocco's King Mohammed V. The mediation follows a reset in ties between Morocco and France that aims to shore up French security interests in the Sahel. Burkina Faso, Niger, and Mali have all severed military ties with France and moved closer to Turkey and Russia following coups in recent years. The World Bank says it has approved Zambia's first climate and catastrophe grants. The so-called Climate and Economic Resilience Development Policy financing component is $25 million, while a $75 million catastrophe drawdown option is contingent funding in the case of a national disaster. The lender says the financing will support critical reforms in Zambia to increase its climate and economic resilience to shocks. South Africa's power utility Eskom is forecasting a return to profit for the first time since 2017. Its loss for the most recent financial year more than doubled due to record power outages and failures at poorly maintained generating facilities. Eskom's improved electricity performance has prevented outages for almost 9 straight months, but the company still faces challenges, including a growing municipal debt. And U.S. Secretary of State Antony Blinken says Washington is receiving positive signs from the rebel group that swept Bashar al Assad from power in Syria. He tells Bloomberg that the U.S. is considering sending officials to the country to help aid in a smooth political transition.
We're looking at all the authorities we have. We're looking at all of the sanctions, not only our own. The United Nations has sanctions on HTS, its leader. And I think what we need to see is actual concrete steps, building an inclusive, non-sectarian government, a transition, eventually getting to an election. As we see these steps taken, then I think we'll be able to respond. Others will be able to respond. That's what we'd like to do. But we need to see concrete action, not simply positive declarations.
The EU's chief diplomat has said she's sending a senior representative to Damascus to talk to this new group, talk to this government. Is that something that you would want to do, that you can do, indeed, given the terrorist designation and the sanctions that are in place?
We've actually been in direct contact with HTS.
On the ground?
I can just tell you we've been in direct contact, and we're also looking at getting people on the ground in Syria. I think it's important to have direct communication. It's important to speak as clearly as possible, to listen, to make sure that we understand as best we can where they're going and where they want to go. So we'll be looking at pursuing that in the coming days.
Pull back and ask you another question about the region, and there's been a lot of speculation that a ceasefire deal could come together. When President Biden spoke about the deal between Israel and Hezbollah, he was asked at the end, do you think you could get a ceasefire deal by the end of your tenure? He said he's hoping and praying. Is there anything that's happened that gives more grounds for hope and prayer going forward here? There is, and the reality is we should logically be able to get this. And I say that with all the caution that comes with that statement, because, you know, we've been very close before, and we've had these Lucy in the football moments where you're just ready to kick the football and Lucy pulls it away. But what's changed is this. Hamas knows that the cavalry is not coming to the rescue. For months and months and months, it hoped it would get a wider war with Hezbollah, with Iran, with Iranian-aligned groups, coming in and creating more problems from Israel on more fronts and helping Hamas endure. We now know that's not happening. They know it's not happening because of the very important work that was done with us and with others, dealing with the unprecedented Iranian attacks on Israel, dealing with Hezbollah. So I think that's concentrated minds among Hamas on the need to complete this deal. Having said that, you know, it's always incredibly fraught, and it's very hard to get decisions made. It's hard to communicate. And for all of those reasons, even as close as it is, you know, it can still move in the other direction. But we've all been fanning out, working with all of the different partners who can make a difference and who may have some leverage with, communications with Hamas, whether it's Qatar, whether it's Egypt, whether it's Turkey, where I was just last week. The fundamental question right now is Hamas finally prepared to say yes? And if it does, we get the hostages back. We get a ceasefire.
Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. While some companies that spent billions of dollars on poorly timed purchases in recent years are now selling them at knockdown prices, Alibaba has become one of the latest victims, offloading Chinese department store chain Intime this week for around 30% of the company's valuation in 2017. For more, let's bring in Bloomberg's deals reporter, Manuel Baigori. So, Manuel, why is this happening right now? Why are these companies taking the decision to divest of other firms that they acquired at such steep discounts?
Christine, the buying and selling, the M&A that keeps us busy day in, day out here. It's a great question. I mean, it's just like we've seen Alibaba, right, which years ago was very acquisitive. And, you know, like Alibaba, many other companies in Asia, in Europe, and in the US. And we've seen this before, right? Like companies that have expanded massively. At some point, they find themselves saying, like, wait a minute, what are our core areas, right? What do we really want to do and become here? And they just decide to retrench and streamline their portfolios and sell those assets that may become non-core. I think in the case of Alibaba, with the deal that we saw announced just days ago with Intime, it was clear, right? They just needed to get out of that business line, and they found a partner to sell it to. And yes, the discount was quite steep, but at some point they just need to make a call and just get out of that business line, and that's what Alibaba did. They've been publicly saying for a while now that they need to refocus and streamline their business.
And do you think that we're going to see more of this kind of action happening?
I do, Christine. Short answer. Companies that have been acquisitive, some of them are well known, right? I mean, take here in China, for instance, we've seen the likes of Fosun and Wanda, and it was H&A years back as well, and many others, right, that have been expanding aggressively, both in Asia and elsewhere, and across different business lines, right? They diversified a lot, which at the time could have made some sense, but now they find themselves trying to kind of refocus, and definitely more to come on this. I mean, companies, buy and sell and try to find different sources of growth, and M&A is one of those tools that they typically go to. So for the same reasons that sometimes they try to expand and buy businesses, years later they may find the need to clean up the balance sheet and just strategically refocus a little bit more on their core areas.
Very quickly, Manuel, can you tell me what the outlook for deal making for 2025 is for you?
Well, Christine, I hope it's busy and that we break lots of news as we typically try to do, but definitely looking slightly better. I think 2024 was a year where, in the US, in Europe, and in Asia, particularly in the second half, we've seen an uptick in deal making. And I think the sentiment from what we hear when we talk to sources is that it's improving gradually, and that there is a good pipeline of deals as we walk into 2025. So yes, there is hopes that next year will be a busy and active one for deal making.
All right. Well, thanks, Manuel. That's Bloomberg's Manuel Baigori. And coming up, big calls on M&A and Bitcoin in the Trump era. We hear from Ark Investment Management CEO Cathie Wood next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Well, Ark Investment Management CEO Cathie Wood says deregulation will be a core focus of President-elect Donald Trump's second term as his administration looks to boost the U.S. economy. She told Bloomberg what she'll be watching for as Trump returns to the White House. Take a listen.
If you look at the performance of our funds since the election, they've far outpaced the market, outpaced the Mag 7 and so forth. So I think what the market is beginning to say is this administration is going to support innovative strategies, anything that will accelerate the growth, increase the productivity of our economy. Deregulation is going to be, we think, a very large part of that. Tax incentives, tax rate cuts as well. You mentioned perhaps the cutback in government spending programs. In our mind, government spending, longer term, is taxation in one form or the other. It's got to be paid for with increased taxes now, increased taxes later, or basically through inflation, inflating away the debt. So we think that's going to be very positive, this drive towards increasing the efficiency of the government, which will then limit the kinds of tax increases we've seen over the last few years, and perhaps even continue to roll back taxes, leaving more for the private sector at the expense of sort of inefficiencies in the government sector.
So, Cathie, following on that, the president-elect has outlined a number of initiatives that he wants to put in place as soon as he is inaugurated on January 20th. Of the different proposals, the pro-growth items that he has on his to-do list, which do you think needs to be prioritized? Is it tax cuts? Is it immigration reform? Is it tariffs? Is it deregulation? Which of those things should be at the top?
Well, consider the source. So my answer might be different from President-elect Trump's answer. But in terms of turbocharging growth, I think if tax rates, if this administration is going to cut tax rates, the most important thing it has to do is make sure they're retroactive to January 1st of 2025. Because, and we learned this from the Reagan administration, if they defer or phase in tax cuts, businesses and individuals will wait for the lower tax rates, and that can weaken economic activity.
That was Ark Investment Management CEO Cathie Wood speaking with our colleague Scarlett Fu. Well, let's pop a quick Bitcoin chart there for you so you can see how we have been trading over the last 20 days or so. Bitcoin is all over the place this morning after reaching that record of over $108,000 earlier. And that is it now for the first hour of Horizons Middle East and Africa. I'm Christine Berg in Dubai. Stay with us for the second hour with Tom McKenzie in London. This is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. The Republican-led House rejects a temporary funding plan backed by Donald Trump with just over 24 hours to go before a government shutdown. Secretary of State Antony Blinken says the U.S. is considering sending American officials to Syria. Stocks and futures head lower after another downbeat day on Wall Street following the Fed's hawkish pivot. U.S. Treasuries under pressure with the yield curve at its steepest since 2022. Good morning. It's just gone 9 a.m. across the Emirates, 7 a.m. in South Africa and 5 a.m. here in London. I'm Tom McKenzie in the UK capital. Welcome to the second hour of Horizons Middle East and Africa. Let's check in on the markets then. As we said, another challenge day for US equities. You saw the Nasdaq under a bit of pressure, the S&P as well, closing the day essentially flat. There was stronger economic data in terms of what we were seeing out of growth out of the US and inflation picking up as well. And the key PCE gauge, we know that is central for the Fed in terms of how they monitor the trajectory of inflation. That drops later today and is the last major data point on the US economy before the end of the year. Asian markets are currently down 0.4%, as you can see across the benchmark. S&P futures stateside pointing to further losses of 0.4%, so a long way from pulling back on that big drop that we saw, the biggest drop, of course, on a Fed day after that hawkish pivot since, 2001 or around about then. S&P futures currently building on the losses, down 0.4%. European futures also set for another challenge day after dropping 1.5% yesterday. European stocks 50 futures down 1%. Bitcoin as well has tumbled, currently at 97,290. Just bear in mind, it crossed 108,000 just a few days ago. So there has been a correction in terms of the crypto space with an eye on Bitcoin. Let's check in on a terminal chart from our team that really illustrates what's going on in terms of the growth picture of the US. And certainly this is a factor now as the Federal Reserve shifts its focus arguably from the September lens on the labour market to the December lens back onto inflation, and growth, of course, ties into that. We had the latest revised growth data coming out yesterday. out of the US on an annualized basis. You saw that print coming in at 3.1%, once again underscoring the resilience of the world's largest economy. The consumer is performing relatively well, and that is key to the strength that we're seeing. Exports also starting to pick out of the US. How that ties into the inflation dynamics will, of course, be key for this Federal Reserve as they price in just 2 cuts now in 2025 with those revised dot plots and forecasts. Let's check in on the Asian markets right now. Bringing Avril Hong standing by for us in Singapore. Avril, walk us through what you're seeing in terms of the session so far in Asia.
Yeah, Tom, Asia's stock market still reeling from the Fed's hawkish pivot. So we're on a 6th session of declines, the longest losing streak since April. The Kospi is underperforming, helping to cap the losses on the Nikkei, actually clocking gains now, is the weak Japanese currency. So that's lifting the export-related counters. And this is following those dovish comments from BOJ Governor Ueda, though the finance chief today has been pushing back and warning against FX speculation. So we're seeing slight gains on the Japanese yen, although it's still sitting above the 157 handle. We are also seeing some gains in China. Interestingly, the Tencent stock is helping to lift the Hang Seng, so extending some of the gains as we're back from the lunch break. But what's really lifting the mainland benchmark are the Chinese chip stocks. There's no obvious catalyst to this today. We have the likes of SMIC climbing by double digits, but some analysts have pointed to optimism surrounding longer-term prospects as the government really goes through with this push on technological self-reliance. So that's helping to lift the Chinese stock gauges. Tom.
OK, so chips in focus when it comes to mainland China and a bit of a boost there. Avril Hong in Singapore for a market check on the Asian space. Thank you. Now, the Republican-led House has voted down, with a switch now to the US, a temporary funding plan backed by President-elect Donald Trump. The rejection sets the stage for a potential US government shutdown. We've heard that before, but the ingredients are very different this time around, with the funding set to lapse on Friday night. The funding set to lapse later tonight, US time. Let's bring in our news desk editor, Jill Deesis, for the details. Jill, why did this fail?
I mean, look, Tom, this is all kind of a surprise anyway, because at the beginning of the week, we were kind of thinking that something like this would actually happen fairly smoothly. Both Republicans and Democrats didn't really seem like they wanted to gear up for a funding fight. They seemed perfectly happy, trying to figure something out on a bipartisan scale so that they could just push this off until March. Obviously, that's not really what happened here. The most recent version of this bill, this Plan B bill, this was advocated by both President-elect Donald Trump and Elon Musk, who obviously Trump is kind of brought in as a big supporter, kind of bringing into his next administration. This version was significantly smaller than the original Plan A bill. That was 1,500 pages. This was 116. It did strip out various different, little bits of, more technical bits of funding and everything like that. But the other thing, too, that this Plan B bill really included was something that Donald Trump had really advocated for, which is a suspension of the debt limit for 2 years. Really interesting to kind of see that enter the conversation. Donald Trump has indicated that really he'd like to abolish the debt limit entirely. But, historically, that hasn't really been a popular subject with Republicans, for one thing. It's actually been something more that the Democrats have really argued for here. But it did seem like, this sort of fast-tracked 116-page bill was just too much to bear for 38 Republicans who ultimately joined the vast majority of Democrats in voting this down. And now we're kind of left in a situation where there's not a real viable alternative. And as we've been discussing, about 24 hours to go before we enter a shutdown here.
Yeah, the clock is ticking, isn't it? And as you say, some Republicans pushed back against this as well and refused to vote in favour of this bill, joining the Democrats. So the splits are there within the Republican Party, at least on the edges. What happens next then as the clock does tick down to this deadline?
Well, Tom, that's the really big question here, and one we might not have a lot of clarity on until, maybe a few hours from now when Washington, D.C. starts to wake up again. But ultimately, the House Speaker, Mike Johnson, will probably have to go back to the drawing board. There's a chance that he could take this fast-tracked legislation, maybe bring it back to the Rules Committee, and then try to bring it back for a vote again. It's a bit difficult to see how that would be successful, considering this was just, a pretty, decisive vote against this legislation. So not something that really seems like it has a lot of opportunity there, but maybe there's something there. But at this point, again, 24 hours to effectively come up with some kind of new legislation, some kind of, that would actually get this across the finish line. But time is ticking, really not a whole lot left, and it does seem like there's some gaps here, particularly when it comes to what Donald Trump is ultimately pushing for versus what it seems like the vast majority of Republicans at least want to sign off on. It's really just it's a bit of a mess here, Tom, and there's not a whole lot of certainty over where exactly this goes other than just there's 24 hours to go, really.
Yeah, not exactly the gift many were hoping for ahead of the holiday season. And we'll have to, of course, think about who pays the political price as well. No doubt that calculation's being made in the halls of Washington if, of course, you do get that shutdown. News desk editor Jill Deesis with the latest. Thank you very much indeed. To geopolitics now, because Secretary of State Antony Blinken says the US has received positive signs from the rebel group that swept Bashar al Assad from power in Syria. Speaking on Bloomberg surveillance, Blinken says the US is considering sending American officials to Syria.
We're also looking at getting people on the ground in Syria. I think it's important to have direct communication. It's important to speak as clearly as possible, to listen, to make sure that we understand as best we can where they're going and where they want to go. So we'll be looking at pursuing that in the coming days. What we don't want to see and what we could see is one dictator replaced by another, one outside power or powers replaced by another, one dominant group replaced by another. And that's certainly been part of the story in other places.
For more on this, let's go to Dana Quraish, Bloomberg's UAE bureau chief. Dana, how significant are these Blinken comments? Clearly the West, clearly those aligned with the US and others in the region are trying to get a feel for what HTS and this rebel group and their allies mean in terms of leadership of Syria going forward on all manner of issues. What then is the significance of the comments that we've been hearing from the US Secretary of State?
Good morning. Yes, the most important thing there and what would be a significant development for the rebels themselves in Syria is that visit by U.S. officials to Damascus that comes after the UK and France also have sent their own delegation. So Hayat Tahrir al-Sham would get more of this international recognition that they're seeking because they want to have a smooth transition coupled primarily with the lifting of sanctions. This is very important to them, and that's what Ahmed al-Shara, who is the rebel commander, has been saying. We want the West to lift those sanctions. So the U.S., though, is saying it is not enough to kind of talk the talk, but you need to walk it too. We need to see a more inclusive governance, and that's what the rebels have been saying. They've been saying, or kind of like rebranding, I would say, their image from radical to moderate to someone who can actually help with the transition. There are a lot of minorities in Syria, and the U.S. has been saying we want to safeguard their rights, and that's what the rebels are saying with this rebranding, that we're not Afghanistan and this is not Taliban. This is a country with a diverse community, so we're going to safeguard that and protect that in the constitution that they want to later amend.
Yeah, the rebanding and how meaningful that actually is clearly significant for the minority groups in Syria as well as partners in the region. We also heard, interestingly, from Russia's Vladimir Putin yesterday saying they're looking to keep their military bases in Syria. They have the port, of course, of Tartus. Let's listen into what the Russian president had to say.
The situation today is difficult, of course, in the Syrian Arab Republic. We are counting on peace and calm to emerge there. We support relations with all groups, with all countries in the region. The overwhelming majority of them say that they would be interested in our military bases remaining in the region.
Dana, on many levels, it's pretty remarkable that the rebel groups who are now in power in Syria would allow and sign off on Russia keeping its bases, given that up until, a few weeks ago, Russia was bombing them in Syria. What role is Russia looking to play here?
This is very also another significant thing for the rebel groups, and that question is what are they going to do with the Russian presence in Syria? The rebels haven't commented on that. They don't want to get into whole international politics. They want to focus inwards. They want to see what they're going to do with the transition to get, like we discussed earlier, that international recognition. And then they look outwards to discuss, foreign policy. But for now, I don't think that they want to discuss the Russian question. And what we've been seeing from reports and some satellite images that were carried by credible media outlets, that Russia has actually started maybe moving its cargo, some of its military assets from Syria to Libya. And that would be also very important because they want to keep that presence in the region. And so what Putin didn't give a straight answer yesterday of whether he would keep or would be let to keep the bases in Syria. But now that the cargo flights are going, maybe he's trying to kind of cover all bases and see if they can't keep it in Syria, then they move it to Libya. And of course, we know in Libya there is a different power dynamic. There are two governments, one that is backed by the international community. And we saw the PM of that government saying yesterday, we don't want Russia to send their assets to Libya. And the other, of course, which is the northeast of Libya, and that is led by Haftar, and those are allies of Moscow. So if Moscow wants to send their assets to Libya, then they probably can.
OK, Bloomberg's UAE Bureau Chief Dana Kreisch on the latest out of that region, of course, with Syria Central and how Russia is thinking about its assets and deployments in that region. Dana, thank you very much indeed for the context. Still ahead, we're going to discuss the currency markets amid enduring dollar strength as traders await the Fed's preferred inflation gauge, the wrecking ball of strong dollar. That's coming up. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Tom McKenzie in London. Now, investors, of course, looking ahead to the Fed's preferred inflation measure due later today. We know the Fed is now squarely focused back on inflation. The gauge of the US dollar hovering around 2022 highs, while the yen has steadied as authorities warn against currency speculation. So there's a lot to talk about within the FX space on renewed dollar strength. Let's bring in Mahjabeen Zaman, head of FX research at ANZ Bank. Mahjabeen, thanks for joining us. Talk to us about whether or not the time has come to fade dollar strength, or if there are further catalysts for upside to the greenback into 2025.
There's so many channels into which we can look at the dollar from as we move into 2025. Of course, the rates channel, which we saw yesterday, clearly played out, a very hawkish Fed, and that's played out in the dollar. But I think there might be more to come, and that's really on the back of two key points. And the first being, again, the macroeconomic outlook. When we look at the US versus the rest of the world, I mean, we saw the GDP numbers yesterday revised higher, close to 3%. Now, 3% versus long-term growth trend of 1.8 just looks like the US is in a great place from an economic perspective, and that should be dollar supportive. And the second point is Trump. We don't know the sequencing, the timing of his plan when he comes in next month. But, either way we look at it, the tariff or the trade policy, if that comes through early in his term, at least in the Q1 or the Q2, surely that will give some more impulse to the dollar on the upside.
What assumptions are you making about rate cuts then from the Federal Reserve next year? Given forecasts have been reduced from 4 from the FOMC to 2, markets seeing fewer than that. What is your assumption at this point with all the caveats around the uncertainty of Trump policy?
So we think that the Fed will ease 3 times, 75 basis points next year. I think, markets obviously now holding on to less than 2 cuts, but we don't have the non-farm payrolls data yet. We don't have the CPI in January yet. Obviously, those things can move. There is two-way risk. But again, we're looking at 3 rate cuts ahead. And we also need to think about, yes, Fed is now looking at inflation, and probably rightly so. Maybe they're thinking about Trump coming in, and his policy could be inflationary, but the job market does not look amazing. Yes, it is pretty strong. Unemployment's relatively low, but job growth, private sector is starting to slow a little bit, and maybe that should be also on their minds.
OK, interesting. You see 3 cuts next year. You have an eye still on the labour market, even as the Fed pivots, it seems, back to the inflation story. You're seeing cracks there. Talk to us about, there's clearly an overlay between what we're seeing with the greenback and with the Japanese currency. Currently at 157 versus the dollar, just up 0.2% so far in the session. It seems like the governor, the Bank of Japan, is in no rush, him and the team, to go again with a hike, even potentially putting on the back burner January, the rate differential then is pronounced at this point. In terms of further yen weakness, do you see them stepping in to intervene to put a floor under this currency?
Look, I think 161 was the recent high which we saw. And look, if it moves towards that 160 mark, already today we have seen verbal intervention coming in, and usually you would expect that. But for them to actually intervene, I don't think that would take place. And, previous interventions have not, unilateral interventions have not been anyway very successful, especially if the dollar-yen rate differential, as you said, remains wide. With the BOJ moving, look, it's not about if, but it's more about when. But, I think it was quite interesting what Ueda said yesterday. He's waiting on the domestic drivers, which is the wages moving up, but at the same time, he's also waiting to see overseas or US developments and Trump policy.
Okay, so at 160, 161, would you be looking to buy the yen at those kind of levels?
Look, in terms of our forecasts into next year, we do think that the Bank of Japan is going to hike, and we spoke about the Fed rate cuts. So, in the short term, sure, we see, a little bit of upside in this low liquidity period. But I think going to next year, we expect dollar yen to be ranging between 145 to 155. And even at 145 to 155, you could argue that's erring on the side of generally a weaker yen rather than a stronger yen, despite rate hikes. We expect 2 rate hikes next year at some point, and even despite that. And that's because that carry advantage will still be in favor of the US dollar, especially if we're looking higher for longer, higher rates in the US next year.
Okay, Mahjabeen, from the US and Japan to the UK now, and we saw arguably a slightly more interesting BOE outcome. Of course, they held, that was fully expected, but the split was interesting, arguably more interesting than maybe some had expected. Look, you have a view of around 125 basis points, 1.25% in terms of cuts from the BOE into and through 2025. The market's pricing in just 50 basis points. What gets us to 125 basis points for the BOE?
Look, I think the struggle for BOE is really balancing, the negative growth story, the PMIs and all of that. That seems to be now slowing down and coming under early, much of 2024 was pretty good, but things are now starting to turn on that front. And then on the other side, obviously the push and pull of the CPI and the inflation side of things. Now on the inflation side of things, services inflation still very sticky. Maybe they started a little bit too early on the easing with services inflation at 5%. But I think, it will be a sort of a chicken and egg. Where should they focus first? And I think, maybe that growth story, trying to avoid a recession or fight a recession rather than looking at that supply side inflation that's coming through might lead to faster rate cuts. But again, we think that's about gradual. We're looking at 1 rate cut every quarter with 2 to end in Q4 next year.
And where would that leave the pound? We're at 124 right now. Does the pound go below 120 on that forecast?
No, because everyone else is also cutting, right? So I think we got to have a clear view on the dollar as well as the other cross-currency basis as well. I mean, with the ECB, we're looking at 1.5% terminal rates. So again, on a relative basis, UK will still be a little bit of the high yielder. So we think there will be into next year, once the dollar stabilizes in the second half of next year, you might see a little bit of upside there. But again, between now up to middle of next year, it's going to be a two-way risk.
Okay, smart insights. Mahjabeen Zaman, Head of FX Research at ANZ. Thank you very much indeed for a deep dive on the G10 FX space. We appreciate it. Coming up, switching to a major corporate story with FedEx soaring in late trading. We're going to get the details of a possible $30 billion spin-off. That is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Tom McKenzie in London. FedEx soared in late trading after announcing it plans to spin off its $30 billion freight unit into a separately listed company within the next 18 months. The spin-off will allow FedEx to focus on its core business and could boost its underwhelming stock performance by capitalizing on rising valuations of standalone trucking companies. Meanwhile, FedEx trimmed its full-year profit forecast due to weak demand, especially in the US and its express unit. The parcel giant attributed its second quarter profit beat to continued savings from its efficiency initiative. And Bloomberg has learnt that Diageo is exploring a sale of Ciroc vodka, a brand once backed by music mogul Sean Diddy Coombs. The British Spirits Group has reached out to potential buyers, including beverage companies and private equity firms, but discussions are still in the early stages. The sale is part of Diageo's efforts to divest assets and focus on its core brands, following a decline in sales and profitability in recent years. Let's check in on the markets then after another challenge day yesterday stateside. Today, S&P E-minis, US futures pointing to further losses, down 0.3%. Nasdaq 100 futures pointing low by 128 points. Dow Jones futures looking to lose around 0.2%. And European stocks, after dropping 1.5% yesterday, looking at further declines. European stocks 50 futures pointing lower by 0.7%. Coming up, how Russian guns and Iranian drones are fueling Sudan's civil war. That is next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. The Republican-led House rejects a temporary funding plan backed by Donald Trump with just over 24 hours to go before a government shutdown. Secretary of State Antony Blinken says the US is considering sending American officials to Syria. Stocks and futures head lower after another downbeat day on Wall Street following the Fed's hawkish pivot. US Treasuries under pressure with the yield curve at its steepest since 2022. Good morning. Just gone 9:30 a.m. across the Emirates, 7:30 a.m. in South Africa. I'm Tom McKenzie in London, where it's just gone 5:30 a.m. Welcome to Horizons Middle East and Africa. Let's check in on the markets then after another soggy day for US stocks. No way from correcting the downside that we saw, of course, the biggest drops that we've seen for quite some time on Fed Day, and yesterday further weakness across the US equity complex. Currently futures pointing to downside as well. We look ahead for the PCE gauge on inflation, where the Fed has its lens, and we know that inflation and concerns about inflation ticking up in 2025 is part of the rationale for why they pulled back their expectations on hikes next year from 4 to 2 with those forecasts. Currently looking across the Asian regional benchmark, the MSCI Asia Pacific at losses of 0.6%, though you have seen some strength from the chip makers in mainland China. S&P futures pointing low by 18 points. European futures, after a drop of 1.5% for European stocks yesterday, pointing low by 0.7%, and Bitcoin taking a knock on the nose at 96,000 currently for the largest cryptocurrency by market cap, currently down 0.5%, but a long way from that 108,000 level that it crossed earlier in the week. Let's check in on a terminal chart that tells us what is happening in terms of the back end of the yield curve. We've seen that steepening then, and that is now pronounced in terms of the strongest and most pronounced steepening that we've seen since, as we said, 2022. There is a lack of appetite for the long end of the Treasury curve on concerns about the debt pile of the US, concerns about a potential tick up in inflation, and concerns about additional spending from the Trump administration, plus, of course, the issuance that continues to come through. So you do have that curve steepening, 10s and 30s versus the front end on the 2-year, and you can see that being illustrated on the chart. One of the largest moves this year, which we've highlighted for you as the markets continue to react to that hawkish pivot and project out into 2025. Let's check in on Chinese assets right now, because Avril Hong is standing by in our Singapore studio with a check on the Asian markets, and Avril has told us about the moves within the chip makers in China. How's the story playing out right now, Avril?
Yeah, we're still seeing a fairly solid picture for some of these chip names, but look at how the gauges have turned negative. I mean, it's the lingering concerns, right, about whether Chinese authorities are going to push through in a forceful stimulus amid a languishing economy. We're seeing dollar China still sitting above 730. Part of this, no thanks to the hawkish Federal Reserve. Where we're really seeing gains is in Chinese bonds amid expectations of monetary easing. And it's worth noting that today, the yield on the 1 year across the key level, the 1%. There is preference in China, it seems, for the shorter dated notes amid a perceived intervention risk on the longer dated notes. This is as authorities have been pushing back against the bond buying frenzy. So this is what we're seeing across assets in China. But flip the board, I wanted to kind of put things into further perspective for you as we, look ahead to the next year, we've actually been seeing quite interestingly the so-called red lines. This chart courtesy of our colleague Randy of the FX team, and it shows you how around some of these key levels across assets, it's seen as seeing these Chinese regulators looking to stabilize things and kind of bolster domestic confidence. On Shanghai Com, for example, 3,300, 1.7% on the Chinese 10-year. So keep that in mind as we look into the end of the year. Tom.
OK, Avril Hong in Singapore, thank you very much indeed. And some of the red lines for Chinese officials as they struggle to put a floor under those markets, and continued, of course, yield lower, price up on the debt, the sovereign debt of China as well. Switching focus right now, millions of dollars worth of Russian and Iranian supplies have changed the course of Sudan's brutal civil war as foreign powers jockey for influence in the strategic country. Moscow and Tehran are arming and fueling the nation's military, which has recently been gaining ground against the paramilitary group, the Rapid Support Forces. Bloomberg's Simon Marks has just returned from Sudan and joins us now. Simon, it's a fantastic piece of on-the-ground reporting from you and the team. Explain to us how outside forces then have fueled this 20-month now civil war.
Yeah, exactly. I mean, since April 2023, we've seen a whole host of nations from Russia and Iran on the one side backing the Sudanese armed forces to the United Arab Emirates, allegedly on the other side backing the RSF through Chad, something that country denies. But really, through our reporting, we've used shipping data, satellite imagery, and interviews with people on the ground at the port there to really show how there's been an influx of weaponry, of fuel, of parts for jets coming into Port Sudan, which is situated right on the Red Sea there, and is the de facto capital now of the Sudanese army. So they're using that port to get things in and also ship things out in the means of gold exports, which they're using to generate funds to afford these supplies fueling the war.
OK, so gold is the payment method. What is the rationale, Simon, then, for Russia and Iran backing the Sudanese armed forces?
Well, really, it boils down to geography. It's, as I just mentioned, it's right on the Red Sea. For Iran, it's got that proximity to its partners in the Houthis, which it backs. And for Russia, they've been lobbying the army for many years now to have a military base situated in Port Sudan, something the army hasn't quite come up trumps with and provided. They're also slightly reticent to go full in with Russia. And there is lobbying from the likes of the US and European partners, for example, not, to provide Moscow with this military base, which is key now, seeing what's happening in Syria and the prospect of them losing assets there. So really, it boils down to situation on the Red Sea and getting a military presence in this key geographic area.
How concerned are Western countries then about the arming of this conflict, the arming of the military in Sudan, in the port of Sudan? Is there anything being done to kind of restrict the arms flows? Is there a broader regional ramification from what is happening on the ground in Sudan?
Yeah, we have seen several rounds of sanctions, as is typical, from the US and Europe against businesses and individuals through travel bans, but also through through targeted sanctions on people who have been accused of supplying weapons. But they don't really seem to have had much impact, to be honest. There's other networks. We can see Russia can get their ships in through the use of their so-called shadow fleet to deliver fuel. And we've also seen that Iran can quite easily send ships from the Gulf area into Port Sudan and get stuff in, not only at the port, but also at the airport, which has been expanded. And the military wing there has had its runway increased and a hangar built to take care of some of these imports that are coming in.
OK, Bloomberg's Simon Marks in Nairobi. Thank you very much indeed. Well worth checking that story out on Bloomberg.com and on the terminal, of course. For more stories like this from the continent, be sure to subscribe to the Next Africa newsletter on the terminal and on the website, and, of course, our podcast, which is available on Apple, Spotify and wherever you get your podcasts. Now for a look at some other stories making the news this Friday. Burkina Faso has released 4 French nationals who were accused of spying and detained for over a year. The West African nation's military leader has reportedly agreed to their release after mediation efforts by Morocco's King Mohammed V. The mediation follows a reset in ties between Morocco and France that aims to shore up French security interests in the Sahel. Burkina Faso, Niger and Mali have all severed military ties with France and moved closer to Turkey and Russia following coups in recent years. The World Bank says it has approved Zambia's first climate and catastrophe grants. The so-called Climate and Economic Resilience Development Policy financing component is $25 million, while a $75 million catastrophe drawdown option is contingent funding in the case of a national disaster. The lender says the financing will support critical reforms in Zambia to increase its climate and economic resilience to shocks. South Africa's power utility Eskom is forecasting a return to profit for the first time since 2017. Its loss for the most recent financial year more than doubled due to record power outages and failures at poorly maintained generation facilities. Eskom's improved electricity performance has prevented outages for almost 9 straight months, but the company still faces challenges, including a growing municipal debt pile. Coming up, Alibaba becomes the latest company to sell a boom time purchase for a knockdown price. We look at that trend next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Tom Mackenzie in London. US Secretary of State Antony Blinken says Washington is receiving positive signs from the rebel group that swept Bashar al Assad from power in Syria. He told Bloomberg the US is considering sending officials to help the country aid a smooth political transition.
We're looking at all the authorities we have. We're looking at all of the sanctions, not only our own. The United Nations has sanctions on HTS, its leader. And I think what we need to see is actual concrete steps, building an inclusive, non-sectarian government, a transition, eventually getting to an election. As we see these steps taken, then I think we'll be able to respond. Others will be able to respond. That's what we'd like to do. But we need to see concrete action, not simply positive declarations.
The EU's chief diplomat has said she's sending a senior representative to Damascus to talk to this new group, talk to this government. Is that something that you would want to do, that you can do, indeed, given the terrorist designation and the sanctions that are in place?
We've actually been in direct contact with HTS.
On the ground?
I can just tell you we've been in direct contact, and we're also looking at getting people on the ground in Syria. I think it's important to have direct communication. It's important to speak as clearly as possible, to listen, to make sure that we understand as best we can where they're going and where they want to go. So we'll be looking at pursuing that in the coming days.
Pull back and ask you another question about the region, and there's been a lot of speculation that a ceasefire deal could come together. When President Biden spoke about the deal between Israel and Hezbollah, he was asked at the end, do you think you can get a ceasefire deal by the end of your tenure? He said he's hoping and praying. Is there anything that's happened that gives more grounds for hope and prayer going forward here?
There is, and the reality is we should logically be able to get this. And I say that with all the caution that comes with that statement, because, you know, we've been very close before, and we've had these Lucy in the football moments where you're just ready to kick the football and Lucy pulls it away. But what's changed is this. Hamas knows that the cavalry is not coming to the rescue. For months and months and months, it hoped it would get a wider war with Hezbollah, with Iran, with Iranian-aligned groups coming in and creating more problems from Israel on more fronts and helping Hamas endure. We now know that's not happening. They know it's not happening because of the very important work that was done with us and with others, dealing with the unprecedented Iranian attacks on Israel, dealing with Hezbollah. So I think that's concentrated minds among Hamas on the need to complete this deal. Having said that, you know, it's always incredibly fraught, and it's very hard to get decisions made. It's hard to communicate. And for all of those reasons, even as close as it is, you know, it can still move in the other direction. But we've all been fanning out, working with all of the different partners who can make a difference and who may have some leverage with, communications with Hamas, whether it's Qatar, whether it's Egypt, whether it's Turkey, where I was just last week. The fundamental question right now is Hamas finally prepared to say yes? And if it does, we get the hostages back. We get a ceasefire.
US Secretary of State Antony Blinken speaking with Bloomberg's David Gura. Now, some companies that spent billions on poorly timed purchases in recent years are now selling them at knockdown bargain basement prices. Alibaba has become one of the latest victims, of course, notably, and we saw that yesterday, offloading Chinese department store chain Intime this week for around 30% of the company's valuation, just 30% of the valuation back in 2017. For more, let's bring in Bloomberg's deals reporter Manuel Baiguri. Manuel, always have a finger on the pulse of the deals-making space. Why is this happening?
Tom, a lot of buying and a lot of selling afterwards, right? That's what we do also as reporters chasing deals. And Alibaba, which had been very acquisitive, as many other groups years ago, is now trying to streamline a little bit their portfolio. I mean, the very sprawling portfolio of different businesses globally. And Intime was an asset that they described or identified as non-core to their strategy going forward. They decided to put it on the block, and they, after months of trying, found a buyer. Definitely a steep discount to the price they paid for years ago, as you mentioned, Tom. But at the same time, at some point, they got to make a call, and they decided just to go for it, even if the price was different to what they were hoping for.
Manuel, is this idiosyncratic to Alibaba, or is this telling us something more broadly about deal-making and the unravelling of some of the value that had been locked in? Do you see more of this coming down the pike?
Definitely more, Tom. I mean, we've seen it with many other groups in recent years. Take here in China, for instance, the likes of Fosun or Maybank or H&A. Other than that, I mean, not to kind of like draw any similarities between these groups, but just generally speaking, companies that have expanded aggressively over the years, then it's normal that during the cycle of, say, 5 to 10 years, they have to sell down their positions in some of the operations and just refocus a little bit on the core areas of business, which for Alibaba, as we all know, is the pure e-commerce part of the business.
Manuel, what's deal making looking like for 2025 then? M&A desks going to be busy?
Well, we hope so, certainly, Tom. We live and breathe on deal making, and we gotta be optimistic about that, as deal makers do, right? And but definitely, I think the sentiment, based on what we hear from sources, is improving. I think the second half of the year, we certainly can say it's being a little bit stronger here in Asia Pacific, definitely stronger than in the first half of 2024. And I think that momentum is definitely a good sign as we bridge into 2025. So I think the expectation is that next year will be better, but it remains to be seen. Always question marks around geopolitics and the uncertainties that may come along the way.
OK, the momentum is there. Let's see if it continues. I can tell you're chomping at the bit to see more flow, Manuel, you and the team. Manuel Baiguri, we'll see if you're kept busy next year. Thank you very much indeed with an update in terms of some of the deal making as we look into 2025. Coming up, Hungary's Viktor Orban tells the EU to wait for Donald Trump before deciding on extending sanctions against Russia. We are live in Brussels with the latest. That is next. This is Bloomberg.
I'd like to suggest to the upcoming presidencies to be brave. Well, this was our slogan for our presidency: "Make Europe great again." This is our only chance. Thank you.
Hungarian Prime Minister Viktor Orban speaking at the EU Leaders Summit yesterday. Let's get more on that summit. Bloomberg understands Viktor Orban has told European leaders he wants to wait until the inauguration of his ally, Donald Trump, before deciding whether to extend the bloc's sanctions against Russia. Let's get the details then, the implications, and bring in Bloomberg's Oliver Crook, who's been on the ground for us. Ollie, how have EU leaders then, how have they been reacting to comments from Orban, who seem to kind of take some of them by surprise?
Yeah, that's right, Tom. Listen, I mean, I think the message from Brussels to Zelensky has basically been consistent for what is now the better part of 3 years since the war began. Reiterated again last night by Ursula von der Leyen, saying that the main message today was full support for Ukraine as long as it takes. Of course, they're trying to find ways to ramp up air defenses, more ammunition, these sorts of deliveries. That being said, as we've just said, you know, we're almost 3 years into this war. There is sort of a muted hope for what can be sort of brought forward to Ukraine. The real concern now is that things are going to be subtracted from Ukraine in the form of these sanctions. So what happens with the European sanctions? We've had 15 rounds of them. They are sort of re-upped every 6 months. And that requires a unanimous consensus from the member states, 27 member states, where Orban can be a sort of blocking force. This is an issue that the Europeans have been dealing with in the past. They're trying to find ways sometimes to work around this. But basically what Orban wants to do is not sort of re-roll these sort of sanctions over until Donald Trump is inaugurated. That is January the 20th. The next deadline for rolling these over is January 31st. So cutting it very fine indeed. And again, this is going to be the question for European leaders. Do they have a way around this? Because this really imperils their sort of credibility in being able to support Ukraine if this becomes a material problem.
We also had some developments when it comes to gas flows into Europe, and it's a reminder that we still get a percentage of our gas from Russia despite the conflict. Putin and Zelensky saying they're not going to come to a deal in renewing one of the gas pipelines, or at least gas deals into Europe. What are the details? How significant is this?
Yeah, Tom, so this is one of the sort of perverse sides of this war, where we've had this sort of weird arrangement where there's still Russian gas flowing through Ukraine, and Ukraine is getting paid to move this gas to the Europeans, who are paying the Russians, that's then fueling their war machine. This has been a sort of contradiction since the very beginning of the war, and this basically, the transit agreement that rolls through Ukraine is set to expire at the end of the year. There have been a lot of sort of questions about, could there be a workaround? Could that Russian gas go to Azerbaijan? Then Azerbaijan sells its own gas through. The Ukrainians effectively are saying no more. This is going to be the end of this. Why it's significant, Tom, and why we've seen a 6% move on the gas price, though we've been sort of anticipating these things, we've also had sanctions on Gazprom Bank recently from the United States, which also sort of impedes the ability to pay for this sort of gas, is that you still get 15 billion cubic meters of Russian gas piped into Europe. That has a very direct effect on a number of countries, including Slovakia. That is less than the 150. That's about 10% lower than it was before. It's 10% of the sort of net price that we had of gas being piped directly from Russia into Europe. But again, it's still significant. It's still a sensitive market. And when you look at the gas storage levels in Europe, they are much lower this year than they have been the last two previous years, because it has been quite a bit colder. And again, when we look at the sort of the context here, in 2021, 40% of piped gas into Europe was from Russia. Now it's only 8%, but this still has an effect on the gas price, as we saw overnight, up 6%. So this is going to be sort of closely watched, although it seems that this sort of transit deal now is over.
OK, and just briefly, Ollie, Syria was on the agenda for EU leaders as well.
Yeah, so listen, I think for the Europeans is the sort of stance for many of other Western countries. Basically, there's a sort of optimism that things could change very well, that this is a historic opportunity to reunite and rebuild the country. It's significant also, Tom, because the EU is going to reopen its mission in Syria. So I think for everybody, they've heard some positive sounds from the HTS leader, Al-Jolani. But at the end of the day, they're going to have to be, the proof is going to have to be in the pudding, though they're moving in the direction, and sort of optimistically so.
OK, Bloomberg's Oliver Crook following the EU Leaders Summit, the details and the discussions rippling through amongst leaders in Europe as they weigh up, of course, Russia, Ukraine and Syria. Ollie, thank you. It is risk-off still across these equity markets. You can see the moves in terms of the futures in the US, European markets pointing lower as well. The opening trade is next. Daybreak Europe with me. This is Bloomberg.